Good morning. In today's streaming, we will see preliminary chapter of Companies Act 2013. Okay, let me check some first. Hello. 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 Okay, it's audible. Now we will start with the chapter preliminary. The Companies Act 2013, that's the chapter 1. In this chapter, we will see the extent and commencement of the Companies Act 2013. We will see the application of the Act. We will gain the familiarity with the definition clause given in the Act. This chapter preliminary covers the chapter preliminary covers short title, extent, commencement, application and definitions. Introduction. Companies Act 2013 is an act to consolidate and amend the law relating to the companies. The legislation was necessitated to meet the changes in the national and international economic environment and for expansion and growth of the economy of our country. The Companies Act 2013 received the assent of the Honorable President of India on 29th August 2013 and was notified in the Official Gazette on 30th August 2013 for public information, stating that the different dates may be appointed for enforcement of different provisions of the Companies Act 2013 through notifications. Section 1 came into force on 30th August 2013. 98 sections came into force on 12th September 2013. Then 143 sections were in force from 1st April 2014 and so on. The Companies Act 2013 is a rule-based legislation with 470 sections and 7 schedules. The entire Act has been divided into 29 chapters. We have 29 chapters in Companies Act 2013. Each chapter has at least one set of rules. For every chapter, there is a set of rules. At least one set of rules for every chapter. The Companies Act 2013 aims to improve the corporate governance, simplify regulations, and strengthen the interest of investors. Thus, this enactment makes our corporate regulation more contemporary. Contemporary means modern or up to date. Okay, now we will see short title, extent and commencement and application. Section 1 of the Companies Act deals with the title of the Act, according to which this Act may be called as Company Act 2013. Companies Act 2013. Further section deals with the extent to the applicability of the Act. It says that the Act shall extend to the whole of the India. So it shall extend to whole of India. This section also specifies the date of commencement of this Act. Accordingly, this section shall come into force at once, and the remaining provisions of this Act shall come into force on such date as the central government may, by notification in the official gazette, appoint, and different dates may be appointed for different provisions of this Act. And any reference in any provision to the commencement of this Act shall constitute as a reference to the coming into force of that provision. This section furthermore states the applicability of the Act. The provisions of this Act shall apply to the companies incorporated under this Act or under any previous company law. For example, let's say ABC is a company, the public company, that is ABC Limited, which was incorporated on 1st January 1972 under the Companies Act 1956. So the Companies Act 2013 shall also be applicable on ABC Limited, because here they have mentioned clearly that the companies incorporated under this Act or under any previous company law. Then, the provisions of this Act shall apply to insurance company except insofar as the said provisions are inconsistent with the provisions of the Insurance Act 1938 or the Insurance Regulatory and Development Authority Act IRDA Act 1999. Then this provision shall apply to banking companies except insofar as the said provisions are inconsistent with the provisions of the Banking Regulation Act 1949. Companies engage in the generation and supply of electricity except insofar as the said provisions are inconsistent with the provisions of the Electricity Act 2003. Any other company governed by any special act for the time being in force, except insofar as the said provisions are inconsistent with the provisions of such special act, and such body incorporated by any act for the time being in force as the central government may by notification specify in this behalf, subject to such exceptions, modifications, adaptations as may be specified in that notification. For example, Food Corporation of India, FCI, National Highway Authority of India, etc. The term except insofar as shall mean excluding the extent of if any provisions of the Companies Act is inconsistent with any of the provisions of other act, either Insurance Act, Banking Regulation Act, Electricity Act, etc., to which the company is regulated, then that company shall comply with the provisions of the respective act or acts to which it is governed or regulated by. So, finally we have seen in the section 1 of preliminary chapter of Companies Act 2013, which covers the title, extent, commencement and application. The title of the act is Companies Act 2013. The extent, it is extends to whole of India. Commencement. Section 1 came into the force at once, and the remaining provisions on different dates through notifications. Application. It applicable, it shall apply to companies incorporated under this act or under any previous law, or to insurance companies, banking companies, companies producing or supplying electricity, and company regulated by special act and entities as notified by central government. Now we will come to the important section of this chapter, that those are definition. It is section 2 of Companies Act 2030 is a definition section. It provides various terminologies used in the act. So basically definition sections or clauses are known as internal aids to construction and can be immense help in interpreting or construing the enactment of any of its part. Now, also according to clause 95 of section 2, the words and expressions used and not defined in this act but defined in Securities Contracts Regulation Act 1956 or the Securities and Exchange Board of India SEBI Act 1992 or the Depositories Act 1996 shall have the meaning respectively assigned to them in those acts. Okay. Now, when a word or a phrase is defined as having a particular meaning in the enactment, it is the meaning alone which must be given to it while interpreting a section of that of the act, unless there be anything repugnant to the context. Now, section 2 states that in this act, unless the context otherwise require, abridged prospectus. Clause 1, that is abridged prospectus, means a memorandum containing such salient feature of prospectus as may be specified by the Securities and Exchange Board by making regulation on this behalf. Accounting standard means the standards of accounting or any addendum thereto for companies or class of companies referred to in section 133. Section 133 of the Act deals with the central government to prescribe accounting standard. As per section, the central government may prescribe the standards of accounting or any addendum thereto as recommended by ICAI constituted under section 3 Chartered Accountants Act 1949 in consultation and with and after examination of the recommendations made by the National Financial Reporting Authority. Section 133 is to be read with Rule 7 of the Companies Accounts Rule 2014. Accordingly, the standard of the accounting as specified under Companies Act 1956 shall be deemed to be accounting standard until the accounting standard as specified by the central government under section 133. Then, till the National Financial Reporting Authority is constituted under section 132 of the Act, the central government may prescribe the standards of accounting or any addendum thereto as recommended by ICAI in consultation and with and after examination of the recommendation made by National Advisory Committee on Accounting Standard constituted under section 110A of the Companies Act 1956. Further, in exercise of the powers conferred by section 133, the central government in consultation with National Advisory Committee on Accounting Standards prescribe that Companies Accounting Standard Rules 2006 and the Companies India's Rules 2015 may be followed. Central Government hereby appoint on the 1st October 2018 as the date of the constitution of National Financial Reporting Authority. Now, we will see the definition of alter or alteration. It simply means it includes the making of additions, omission and substitution. Addition, omission and substitution. Articles means the articles of association of a company as originally framed, as altered from time to time and apply in pursuance of any previous company law applied in pursuance of this act. Associate company in relation to another company means a company in which that other company has a significant influence but which is not a subsidiary company of the company having such influence and includes joint venture company. For example, there is explanation in the law. For the purpose of this act, the expression significant influence means control of at least 20%. So at least 20. So equal to 20 or more than 20% of control. So we will see what the definition of control also. 20% of voting power or control of or participation in business decision under an agreement. The expression joint venture means a joint arrangement whereby the parties that have a joint control of the arrangement have rights to the net assets of the arrangement. White Circular dated 25th June 2014, it has been clarified that the shares held by a company in another company in a fiduciary capacity be counted for the purpose of determining the relationship of associate company. A fiduciary is a person who holds a legal or ethical relationship of trust with one or more parties, persons, or group of persons. Typically, a fiduciary prudently takes care of money or other asset of another person. Student may please note that the definition associate company as defined under Accounting Standard 23 and India's 28 accounting for investment in associates in consolidated financial statement or investment in associates and joint ventures is slightly different from the above definition as given in Companies Act 2013. Now 7. Clause 7 define auditing standard. Auditing standard means the standards of auditing or any addendum thereto for companies or class of companies referred to in subsection T of Section 143. Section 143 of Companies Act 2013 deals with the powers and duties of auditors and auditing standard. Subsection 10 to Section 143 provides that the central government may prescribe the standards of auditing or any addendum thereto as recommended by the Institute of Chartered Accountants of India, constituted under Section 3 of Chartered Accountants Act 1949, in consultation with and after examination of the recommendation made by the NAFRA, National Financial Reporting Authority, provided that until any auditing standards are notified, any standard or standards of auditing specified by ICAI shall be deemed to be the auditing standards. Now, Clause 8 defines authorized capital or nominal capital. Means such capital as is authorized by the memorandum of the company, the MOA of the company, to be the maximum amount of share capital of the company. Now, we will see Clause 10 Board of Directors or Board. In relation to a company means the collective body of directors of the company. Body corporate or corporation includes a company incorporated outside India but does not include a cooperative society registered under any law relating to cooperative societies and any other body corporate not being a company as defined in this Act, which the central government may by notification specify in this behalf. Book or paper include books of accounts, deeds, voucher, writings, documents, minutes, registers maintained on paper or in electronic form. Books of accounts includes records maintained in respect of all sums of money received, and expended by a company, and matters in relation to which the receipts and expenditures takes place. Then all sales and purchases of goods and services by the company, the assets and liabilities of the company. For example, this is like format for cash flow statement or underlying documents for cash flow statement. This would be like for P&L and assets and liabilities, shows a balance sheet. So this is the form, like the required documents for balance sheet. Then the items of cost as may be prescribed under section 148 in case of the company which belongs to any class of companies specified under section 148. So books of account, or in case of a company specified under section 148, items cost specified under section 148 and 123. For other companies, receipt and expenditure, sale and expenditure, asset and liabilities. Now we will see clause 14, that is branch office. In relation to company means any establishment described as such by the company. Any establishment described as such as a branch office by the company. Then we will see called up capital. Clause 15 means such part of the capital which has been called for payment. Charge means an interest or lien created on the property or assets of a company or any of its undertaking or both as security and includes a mortgage. So charge means an interest or lien created on property or asset of a company or any of its undertaking or both as security and includes a mortgage. So interest as a security, lien as a security. Interest on what? Asset, property or asset of which company or its undertaking or a both. And it includes mortgage. Now chartered accountant means a chartered accountant as defined in clause B, subsection 1, section 2, section 2, subsection 1, clause B of the CA Chartered Accountant Act 1949, who holds a valid certificate. You should have a valid certificate of practice. You should have a valid certificate of practice under subsection 1 of section 6 of the Act. Then this COP, that certificate of practice, is mentioned in the section 1, subsection 1, section 6, subsection 1 of the Chartered Accountant Act 1949. Now, the clause 18 deals with the Chief Executive Officer, CEO, means an officer of a company who has been designated as such by it. Chief Financial Officer means a person appointed as the Chief Financial Officer of a company. This definition of CEO and CFO should be read with section 251, 15 key person, and 203, which deals with the definition and appointment of key managerial person, KMP, of the Companies Act 2013. Now, we will see clause 20. Company means a company incorporated under this act or under any previous company law. Reliance Industry Limited incorporated in 1973. Tata Steel Limited incorporated in 1907. Infosys Limited incorporated in 1981. Such companies are incorporated under Companies Act 1956. Previous company law are also included in the above definition for being treated as a company. Section 2, Clause 21, Companies Limited by Guarantee. Means a company having liability of its members limited by memorandum to such amount as the members may respectively undertake to contribute to the assets of the company in the event of its being wound up. Company limited by shares, 22 clause, means a company having the liability of its member limited by memorandum to the amount, a penny unpaid on the shares respectively held by them. Example, shareholder who has paid rupees 75 on a share of face value rupees 100 can be called upon to pay the balance of rupees 25 only. Contributory. Clause 26 says that means the person liable to contribute towards the assets of the company in the event of its being wound. Explanation. For the purpose of this clause, it is hereby clarified that a person holding fully paid up share in a company shall be considered as contributory. So basically, he said the person liable to contribute towards the asset of the company in the event of its being wound up. But for the purpose of this clause, it is clear that a person holding fully paid up share, even if he has fully paid up shares, he don't have to contribute anything at the time in the event of his being wound up, because he already fully paid up the shares. So in that case, for the purpose of this clause, we will consider that fully paid up shareholder also as a contributory. Now, clause 27, that is control, that in the definition of associate company we have seen that in relation to the another company, the company means the company in which that other company has a significant influence. And when we define which has significant influence and but not, it is not a subsidiary company of the company having such influence, and includes joint venture, where the significant influence is something known as the control of at least 20% of voting power and control of or participation in business decision under an agreement. So here we have to understand there is a term that is control, and now we have to define this control for this act in clause 27 of section 2. So control shall include the right to appoint majority of the directors or to control the management or policy decision exercisable by a person or a person acting individually or in concert, directly or indirectly, including by the virtue of their shareholding or management rights or shareholders agreements or voting agreements or in any other manner. So here we have to understand that control shall include inclusive definition, the right to appoint majority of directors or to control the management policy decisions exercisable by person or persons acting individually or in concert, directly or indirectly, including by virtue of their shareholding rights, management rights, shareholders agreement, voting agreements, or any other manner. It is an inclusive definition and relevant for the provision relating to the subsidiary and holding company. Okay, now we'll see debentures. The clause 30 talk about says about debenture. Debenture includes, it's also inclusive definition. It's a debenture stock, bonds, and any other instrument of a company evidencing a debt, whether constituting a charge on the assets of the company or not, provided that the instruments referred to in Chapter 3D of the Reserve Bank of India Act 1934 and such other instrument as may be prescribed by the central government in consultation with Reserve Bank of India issued by a company shall not treated as debenture. So debenture include debenture, stock, bonds, or any other instrument of a company evidencing a debt, whether constituting a charge on the assets of the company or not, provided that the instruments referred to in Chapter 3D of Reserve Bank of India, not 1934. Such other instrument as may be prescribed by the central government in consultation with RBI issued by a company shall not be treated as a debenture. Okay, now clause 34 talk about director. Director means a director appointed to the board of the company. Dividend includes interim dividend. This is the definition. Document. Document includes, this is also includes the definition. Summons, notice, requisition, order, declaration, form, and register, whether issued, sent, or kept in pursuance of this Act or under any other law for the time being imposed or otherwise, maintained on a paper or in electronic form. 37. Employees stock option means the option given to the directors, officers, or employees of a company or of its holding company or a subsidiary company or companies, if any, which gives such directors, officers, and employees the benefit or right to purchase or to subscribe for the shares of the company at a future date at a predetermined price. At a future date at a predetermined price. Now, expert. Clause 38, that is expert, includes an engineer, a valuer, a chartered accountant, a company secretary, a cost accountant, or any other person who has the power, authority to issue a certificate in pursuance of any law for the time being enforced. Financial statement. This is the important definition. Clause 40 defines financial statement in relation to company includes, this is also inclusive definition, a balance sheet. Balance sheet always as at the end of the financial, it's a financial position of a company and it is for a particular time, particular date. So as at the end of the financial year. Then a profit and loss statement, or in case of a company carrying on an activity not for profit, that is income and expenditure account for the financial year. Then cash flow statement of the financial year. So for the financial year, and this is for the profit and loss statement is for the financial. Then a statement of changes in equity if applicable. Then any explanatory note annexed to or forming part of or any document referred to in subsection some subclause 1 to subclause 4. So any explanatory note annexed to or forming part of these documents, this a balance sheet, a profit and loss account, cash flow statement, statement of changes in equity, this also forms part of financial statement, provided that financial statement with respect to OPC, one person company, small company, dormant company, may not include the cash flow statement, and also private company which is recognized as startup by DIPPP. For the private companies exemption, the proviso to section 240 shall be read as follows. Provided that financial statement with respect to OPC, SC, one person company, small company, DC, dormant company, and PC, that is the startup, SUPC, startup company, if such private company is a startup, may not include the cash flow statement. So for this company, there is an exemption for cash flow statement. For the purpose of this act, the term startup or startup company means a private company, sorry, incorporated under the Companies Act Companies Act 2030 or the Companies Act 1956 and recognized as a startup in accordance with the notification issued by DIPP, Department of Industrial Policy and Promotion, Ministry of Commerce and Industry. The exceptions, modifications, and adaptation shall be applicable to a private company which has not committed default in filing its financial statement under Section 137 of the said Act, annual return under Section 92 of the said Act with the registrar. Students may note that the profit and loss account may also refer as a statement of profit and loss under the Act at some places. Now, clause 41 deals with the financial year. Now, in relation to any company or a body corporate means the period ending on 31st day of March every year. Here we have to understand that they have clearly defined means the period ending on 31st day of March every year. So, and where it has been incorporated on or after first day of January of the year, the period ending on the 31st day of March of the following year, in respect of whereof financial statement of the company or body corporate is made up. Here we have to understand the financial year always end on 31st March. Now, on which financial year, that we need to understand. If the company is incorporated up on or after 1st January, so 1st January on after 1st January up to 31st March, here we have to understand for these company incorporated on or after 1st January, the year, a financial year will end on the 31st March of the following year. For example, let's take an example. If a company got incorporated on 2nd January 2024, the financial year will end on 31st March 25, not 24. Okay. So maximum period of a financial year would be 15 months. So, provided that where a company or a body corporate which is a holding company or a subsidiary company of or associate company of a company incorporated outside India and is required to follow a different financial year for the consolidation of its accounts outside India, then the central government may, on application made by the company or a body corporate in such form and manner as may be prescribed, allow any period as its financial year, whether or not that period is a year. Now, the term company incorporated outside India refers to foreign company incorporated under any applicable laws for the constitution of company outside India. Now, we will see clause 43, free reserves. Means such reserves which, as per the latest audited balance sheet of a company, are available for distribution as dividend. जो भी पैसा पड़ा हुआ, which we can distribute to your shareholders as dividend, that's a free reserve. Okay, but as per latest audited balance sheet. Okay, so latest audited balance sheet, so those are the free reserves. Here IFC के बारे में provided that any amount representing unrealized gains, notional gains, devaluation of assets, whether shown as a reserve or otherwise, or any change in carrying amount of an asset or of a liability recognized in equity, including surplus in profit and loss account, or measurement of the asset or liability at fair value. So जो भी revaluation reserves रहेगी या unrealized gains रहेगा, notional gains रहेगा, revaluation of assets which we will not consider in the free reserves. shall not be treated as pre-receipt. Now, 44 GDR. No, GDR. Global Depository Receipt means any instrument in the form of a depository receipts by whatever name called created by a foreign depository outside India and authorized by a company making an issue of such depository receipts. Government company means any company in which not less than 51% of the paid up share capital. So this is the important definition under clause 45 to 45. Means any company in which not less than 51% is at least 51% or more. So not less than 51% of the paid up share capital is held by one, either central government or state government or by any state government or more than one state government or partly by central government and partly by by one or more state government, and includes a company which is a subsidiary company of such government company. Now, explanation. For the purposes of this clause, the paid up share capital shall be construed as total voting power where shares with the differential voting rights have been issued. Now, X Industries Limited is a company in which 25% of the shareholding is held by central government, 10% held by the government of Maharashtra, and 15% of shareholding is held by central government. So 25% is shareholding is held by central government, 10% Maharashtra government, 15% is held by central government and government of Rajasthan. So partly by central government and partly by Rajasthan government. So 15% held by this central government and Rajasthan government. Here, X Industries Limited is not a government company as there is no compliance of minimum holding of paid up share capital because total share capital 25, 10, 15. 25, 50%, not 51, at least 51% is needed to becomes under the definition of government company, which is not fulfilled over here. So, by the central government or by any state government or governments or partly by central government, partly by one or more state government. Okay. No. Now we'll see 46. Clause 46 defines holding company. What defines? Nothing. In relation to one or more other companies means a company of which such companies are subsidiary companies. So to learn this definition, we have to have a clear idea of subsidiary company, which we'll see further. Now, explanation. For the purposes of this clause, the expression company includes any body corporate. For meaning of subsidiary company, refer the definition given in section 287 of the Companies Act 2013. So this section, 2 clause 87, we need to understand, learn the definition of holding company. Now, issued company, clause 50, issued capital means such capital as the company issues from time to time for subscription. Company issues from time to time for subscription. Key managerial personnel, 51. Section 2, clause 51. This is an important definition. In relation to a company means the CEO, Chief Executive Officer, the Managing Director or the Manager. Then Company Secretary, Whole-time Director, Chief Financial Officer. So CEO or Managing Director or Manager, Company Secretary, CFO, whole-time director, and such other officers are not more than one level below the directors who is whole-time employment. It should be in whole-time employment, designated as key managerial personnel by the board, and such other officer as may be prescribed. However, till now, no other officer has been prescribed. So कौन कौन पकड़ में आएगा? CEO, Managing Director, Manager, Company Secretary, Full-time Director, CFO. And such other officer not one below of the directors and in the whole time employment designated as KM. So three conditions need to be done. It should be not one level below the directors. It should be in whole time employment and should be designated as KMP by the board. Okay. Now another prescribed officer. Now 52 talks says about listed company. Means a company which has any of its securities listed on any recognized stock exchange. Which has any of its securities listed on any recognized stocks exchange. Means like not foreign stock exchange. Recognized stock exchange only two: NSE, National Stock Exchange, and Bombay Stock Exchange. In this recognized stock exchange, the securities are listed, then this company called as listed company. Now, there are different types of securities also. So here provided as such class of companies which have listed or intend to list such class of securities as may be prescribed in consultation with the SEBI, say Securities and Exchange Board of India, shall not be considered as listed company. According to Rule 2A of the Company's Specification of Definition Details, Rules 2014, the following classes of companies shall not be considered as listed companies, namely, public companies which are not listed their equity shares on a recognized stock exchange but have listed their non-convertible debt securities issued on private placement basis in terms of SEBI issue of listing debt securities regulation 2008. So non-convertible debt securities have issued on private placement basis in terms of SEBI should not be considered have not listed their equity shares. This public company which have not listed their equity shares on a recognized stock exchange but have listed non-convertible debt securities on a private placement basis, which should not be considered as a listed company. The non-convertible redeemable preference shares, this is also non-convertible and issue on private placement basis in terms of SEBI issue and listing of non-convertible redeemable preference shares regulation 2013 or both categories of 1 and 2 above. Then these public companies shall not be treated as listed company. Then private companies which have listed their non-convertible debt securities on private placement basis on a recognized stock exchange in terms of SEBI issue of listing of debt securities regulation 2008. Then public company which have not listed their equity shares on a recognized stock exchange but whose equity shares are listed on stock exchange in jurisdiction as specified in subsection 3 of section 23 of the Act. Means in foreign stock exchanges they have listed subsection 3 allows overseas direct listing. Means the company central government may allow notified class of securities to be listed on notified class of companies in permitted stock exchange in permissible foreign jurisdiction. So this is foreign stocks exchanges where you are listed even equity shares also. These public companies shall not be treated as listed company in India. Got it? No. Because they have not listed their equity shares on recognized stock exchange, NSE or BSE, but they list their equity shares on foreign stock exchange. That many times. Now we will see section 2, clause 53, that is manager. Manager means an individual who is subject to the superintendence, control, direction, superintendence, control, direction of the board of directors, has the management of the whole or substantially the whole of the affairs of the company and includes a director or any other person occupying the position of the manager by whatever name called, whether under a contract of service or not. Then 54, managing director means a director who, by virtue of the articles of a company or an agreement with the company or a resolution passed in its general meeting or by its board of directors, is entrusted with the substantial powers of management of the affairs of the company and includes a director occupying the position of managing director by whatever name called. Explanation. For the purposes of this clause, the power to do administration acts of a routine nature when so authorized by a board, such as the power to affix the common seal of the company to any document, to draw or endorse any check on account of the company in any bank, to draw or endorse any negotiable instrument, or to sign any certificate of share or to direct registration of transfer of any share shall not be deemed to be included within the substantial powers of management. This power is not a substantial. This is not a substantial power. We have to make decisions to run the current affairs of the management. That is the power which is held by managing director or manager. Now, explanation. For any individual to be called as a managing director, an individual shall first be a director duly appointed by the company under the provisions of Act 2013. This also implies that an individual who is not a director in the company cannot be appointed as a managing director of that company. Now, member. In relation to a company means the subscriber to the 55, the subscriber to the memorandum of the company who shall be deemed to have agreed to become a member of the company and on its registration shall be entered as a member in its register of members. So, subscriber of the company who shall be deemed to have agreed to become a member of the company and on its registration shall be entered as a member in its register of members. Then every other person who agrees in writing to become a member of the company and whose name is entered in the register of members of the company. Then every person holding shares of the company and whose name is entered as a beneficial owner in the records of depository. Now, memorandum. Clause 56 means the memorandum of association of a company as originally framed and altered from time to time in pursuance of any previous company law or of this act. Now, 57 is the important definition. It is net worth. So, when you say net worth, means the aggregate value of paid up share capital and all reserves created out of profits, 3 reserves, securities premium account and debit and credit balance of profit and loss account. So net worth means the aggregate value of paid up share capital, 3 reserve, profits created out of the reserves created out of the profits, then security premium account, then debit and credit balance, profit and loss account. Then after deducting we have to deduct something, the aggregate value of the accumulated losses, deferred expenditure and miscellaneous expenditure. Accumulated losses, deferred expenditure and miscellaneous expenses. Miscellaneous expenses, accumulated losses, deferred expenditure and not written off, as per the audited balance sheet, but does not include reserves created out of the revaluation of asset, write back of depreciation and amalgamation. Reserves does not include reserves created out of revaluation of asset, and write back of depreciation and amortization. Okay. This is the definition of net worth, which is defined in the section 2 clause 57, which is important definition. Now we will calculate net worth for this company. The statutory auditors of a company were required to issue a certificate on the net worth of the company as per the requirements of the management as on 30th September 2024, computed as per the provisions of section 257 of the Companies Act 2013. The company had fair value its property, plant, equipment in the current year, which was mistakenly taken into the retained earnings of the company in its book of account. So the revaluation, which we have to exclude from the net worth calculation. So here we see that advice whether their fair valuation would be covered in the net worth of the company as per the requirement. So this revalued the reserve created of the revaluation of assets should be excluded from the net worth. So they have not this fair valuation be would not be covered in the net worth. For example, answer as per section 257 of the Companies Act 2013, any reserve created out of the revaluation of asset doesn't form part of the net worth. The company fair value its property, plant, equipment, and took that to retained earnings. Even if the company has taken the fair valuation to the retained earning in its books of accounts, the resultant credit in reserve, by whatever name called, would be in the category of reserve created out of the revaluation of asset, and which is specifically excluded in the definition of the net worth in section 2 clause 57, and he should be excluded by the company. Further, the auditor should also consider the matter related to the accounting of this reserve separately at the time of audit of the books of accounts of the company. Next. We will see clause 58, notification. Means the notification published in the official gazette of the expression and the expression notified shall be construed according. 59. Officer includes any director, manager, key managerial person, or any person in accordance with whose direction or instructions, advice, direction, or instruction the board of the directors or any one or more of the directors is any one, even one board of directors or any one or more of the directors is or accustomed to act is also included in the definition of officer. So director, manager, key managerial person, in the definition of 2 clause 51 talks about a key managerial person. Who are the key managerial person? First one, CEO or manager or managing director. Then whole-time director, company secretary, CFO, any other person, one not more than one level below the directors, board of directors, and who is designated as KMP by the board, and he is in full-time employment, and other prescribed officer. So key manager person or any person in accordance with whose advice, direction, instruction the board of director or any one or more of the directors is or are accustomed to act. Then we'll see clause 60, officer who is in default. For the purpose of any provisions in this act which enacts that an officer of the company who is in default shall be liable to any penalty, punishment by way of imprisonment, fine, and otherwise means any of the following of the officers of a company, namely, suppose whole-time director, key manager person, where there is no key manager person, such director or director as specified by the board in this behalf and who has or have given his or their consent in writing to the board of directors to such specification or all the directors. What is it? Yeah, where there is, hello, so to check. Then has given his or their consent in writing to the board to such specification or all the directors if no director is so specified. So any person who under the immediate authority of board or any key managerial person is charged with any responsibility including maintenance, filing or distribution of accounts or records authorizes actively participates in knowingly and permits and knowingly fails to take active step to prevent any default. That person. Then any person in accordance with whose advice, direction, instruction, the board of directors of the company is accustomed to act, other than a person who gives advice to the board in a professional capacity. भाग गए ये भाग professional capacity वाले भाग गए. Then every director, in respect of a contravention of any of the provisions of this Act, who is aware of such contravention by virtue of the receipt by him or any proceedings of the board or participation in such proceedings without objecting to the same, or where such contravention had taken place with his consent or connivance. This is important, What is saying, Here they have mentioned every director, in respect of contravention of any of the provisions of this Act, who is aware of such contravention by virtue of receipt by him of any proceeding of the board or participation in such proceeding without objecting to the same, or where such contravention had taken place with his consent or connivance. Okay, no. In respect of the issue of transfer of any shares of the company, the share transfer agents, registrars, merchant bankers to the issuer transfer. This is you can say officer who is in default. Officer in default. Now, example: in a company, a default was committed with respect to the allotment of shares. So, in a company, a default was committed with respect to the allotment of shares by the officers. In a company where there were no managing directors, full-time directors, manager, secretary, or person charged by the board with the responsibility of complying with the provisions of the Act, and neither any director or directors specified by the board. Therefore, in such situation, all the directors of the company may be treated as officers in default. Now, one person company means a company which has only one person as a member. And then ordinary or special resolution means an ordinary resolution, or as the case may be, special resolution referred to in section 114, ordinary and special resolution. Now we will see 64. Paid up share capital. Share capital paid up means such aggregate amount of money credited as paid up as is equivalent to the amount received as a paid up in respect of shares issued, and also includes any amount credited as paid up in respect of shares of the company, but does not include any other amount received in respect of such shares by what or name called. No, postal ballot means voting by post or through any electronic mode. This definition is related to section 110 to be read with Rule 22 of the Company's Management and Administration Rule 2014, specifying the procedure to be followed for conducting of business through postal ballot, and provides the list of items of business which should be transacted only by means of voting through a postal ballot. Now we will see prescribed. Prescribed means prescribed by the rules and made under this Act. Prescribed by the rules made under this Act. Now, private company means a company having a minimum paid up share capital as may be prescribed, and which by its articles restrict the right to transfer its share except in case of OPC, limits the number of its members to 200, provided that where two or more persons hold one or more shares in a company jointly, so joint shareholder should count as one shareholder for the calculation of this limitation. And then they shall, for the purposes of this clause, be treated as a single member, provided further that a person who are in the employment of the company and shareholder or member of the company, then the person who have been formerly in the employment of the company and were members of the company while in that employment and have continued to be members after the employment cease. Even after ceasing of the employment, he is the member which was uh, which he was the member uh, when he was in the employment with the company. Shall not be included in the number of members. So first thing, restrict the right to transfer its share. First one is restrict the right to transfer its share. Second, except restrict the right to transfer its shares except in case of OBC where there is a single member, limits the number of its member to 200, and in calculation of this 200, which we will not consider the person who are in the employment of the company and person who have been formally in the employment of the company, were members of the company while that employment and have continued to be members after the employment ceased. Shall not be included in the number of members. Now, but prohibits any invitation to the public to subscribe for any of the securities of the company. The requirement of having a minimum paid up share capital shall not apply to a Section 8 company, formation of companies with charitable object, etc. Wide notification dated 5th June 2015. The above mentioned exemption shall be applicable to a Section 8 company which has not committed a default in filing its financial statements under Section 137 of the Companies Act 2013 or annual return under Section 92 of the said Act with registrar. Void amendment notification GSR file 84E dated 30 June 2017. Now, promoter means who has been named as such in a prospectus or is identified by the company in annual return referred to in section 92, or who has control over the affairs of the company directly or indirectly, whether as a shareholder, director or otherwise, or in accordance with whose advice, direction and or instruction the board of the directors of the company is accustomed to act, provided that the nothing in subclause C shall apply to a person who is acting merely in a professional capacity. Okay, now we'll see the section 70, section 2, clause 70, prospectus. Means any document described or issued as a prospectus and includes a red herring prospectus or shell prospectus or any notice, circular, advertisement or other document inviting offers from the public for the subscription or purchase of any securities of a body corporate. Now we will see section 271. Public company means a company which is known to be a private company in its articles. Here they have mentioned that the public company means a company which is not a private company